This is your Wall Street wake-up call. The European Central Bank leaving key interest rates unchanged. This is its first policy meeting since that all-important Brexit vote back in June. Well, here with more analysis is Brian Relling, the co-head of Global Fixed Income at Wells Fargo Investment Institute. So, Brian, no changes, not a surprise here, especially after the Bank of England's move not to cut rates last week.
Absolutely, no surprise here. It was clear that Draghi and the ECB was going to wait for more information on the Brexit vote before, deciding their next step.
And in that press conference that's coming up, perhaps we'll hear more analysis on what's to come in the coming months, perhaps more stimulus when the ECB meets in September.
Yeah, I think in general, the market is looking for more stimulus at some point in the future. There is some impact from the Brexit vote. Exactly what that is, they're waiting for a little bit more data, but more stimulus on the way at some point.
Well, that's the thing, because, Brexit is largely, I think we can safely say at this point, a UK issue. But it's got to be on the mind of Draghi, perhaps more so than other heads of central banks.
Yeah, no question. The ECB is obviously one of their largest, if not largest, trading partners. So, that's a key consideration. In fact, a lot of the public opinion polls I've seen suggest that individuals in the ECB are more concerned about the impact on the economy of Brexit than perhaps people in the UK.
And what about reports that the ECB is running out of bonds to buy? What do you make of that, and how do they tackle that?
Well, we might see some modifications to their bond buying program, exactly what bonds they're allowed to buy.
In what sense? Because we know now they're buying corporate bonds.
Yeah, they're buying corporate bonds, but there is a limit on, as yields fall, how low of yields they can buy, and so that begins to limit the pool. So if they potentially drop that limit or make some other tweaks, they may be able to expand the pool. But that is a concern for the market, and I think for the ECB as well, that pool of bonds that under their current plan they're allowed to buy.
And that current plan, they're buying 80 billion euros worth of those assets per month. Now,
that's right.
That plan runs until September of next year. Do you think we'll hear today that's actually being extended beyond that date?
I don't think we'll get definitive confirmation that that's being extended or expanded, but I think that's definitely on the table for future months as, again, the full impact of Brexit becomes fully known or more clear in terms of the economic impact.
All right, now we also have the Federal Reserve meeting next week and the BOJ, but I want to ask you about the Fed's plan because we're seeing stocks, reach record highs almost on a daily basis. We see the employment situation sort of confirm that, maybe some of the weakness we saw a few months ago is not exactly that pressing. Does this sort of give the Fed an opening to hike rates one more time in September or even December?
I don't think they should, but will they? If everything goes right, we could get another rate increase this year, most likely in December. But again, in the last couple of years, when has everything gone right for 5 or 6 months in a row? So there's the possibility out there, but I think the Fed still has, in my mind, an inflation and specifically an inflation expectation problem in the sense that it's, especially market-based indicators of inflation expectations are well below their target levels.
Target levels of 2%. Yeah. All right, Brian Relling from Wells Fargo Investment Institute, thank you for coming by.
Great, thanks for having me.
I'm Scott Gamm, and you're watching The Street.